Hello learners, we have discussed a lot about fundamental analysis and we have seen that fundamental analysis can be categorized into two categories. First one is qualitative analysis and second one is quantitative analysis. So we have discussed a lot about qualitative analysis. Now I would like to discuss about quantitative analysis. So if you are doing quantitative analysis, so in previous lectures I have told you that there are three stages of quantitative analysis. First, you have to do economy analysis. After that, you have to do industry or sector analysis. And after that, you will be doing company analysis. And we have seen that if you want to do economy analysis or industry analysis, or if you want to do a company analysis, so what process you have to follow, right? Now, further, I will be discussing more about quantitative analysis, that how you will be doing the quantitative analysis. So first of all, if you want to do a quantitative analysis, so definitely you need a financial statement of that particular company, right? So we know that financial statement include P&L account, balance sheet and cash flow statement and also notes to accounts, right? So we will be discussing about these things in detail, that how you will be doing quantitative analysis and what are the methods of doing quantitative analysis. So we will be discussing about ratios. Ratio is the best method to do quantitative analysis or to check the performance of company, that how company is performing. Another important method is vertical and horizontal analysis to do proper quantitative analysis. So we will be doing these things in coming lecture. So quickly what I will be doing here, I will be showing you the annual report, or you can say financial statement of Dabur Limited, right? So I have opened up the financial statement of Dabur Limited, and here with the help of this financial statement, you will be able to understand that how they prepare their financial statement. So if you see here, independent auditor report is given. So basically in every financial statement, you will find auditor report. They will tell you that how they have prepared financial statement, whether these financial statements are prepared properly or not, right? So if you are getting auditor report, then you can believe that company has properly shown all the transactions. So auditor generally they provide you assurance that company has prepared their financial statement properly, they have followed all the accounting standards, they have provided all the relevant information, and there is no mismatch or fraud in the financial statement. If there will be any fraud, they will clearly mention in auditor's report. So I will give you the glimpse of auditor report, that what will be the components of auditor report, right? So if you see, we have here auditor is saying that we have audited the accompanying standalone financial statement of Dabur India Limited, right, which comprise the balance sheet as on 31st March 2021, statement of profit loss account and cash flow statement, right? Also it includes a statement of changes in equity and summary of significant accounting policies and explanations, right? So these informations are available here, right? Now what auditor is saying, if you read next point, so auditor is saying, in our opinion, and to the best of our information, according to the explanation given to us, the aforesaid standalone financial statement give the information required by Companies Act 2013 in manner so required and give true and fair view in conformity with the accounting principles generally accepted in India, including accounting standards, that is in this specified under section 123 of Companies Act, right? So here if you see, they are saying as per their opinion, company has complied all the regulations or clauses which are mentioned in Companies Act, right? Now if you see further, they have given some information. We conducted our audit in accordance with the standards on auditing specified under section 143 of that, and our responsibility under those standards are further described. So they are saying they have conducted their audit as per the requirement of standard, right? And what they are saying, company has prepared their financial statement properly, they have complied with all the relevant accounting standards, and these things are given, right? So if you want to check whether the financial statements which are provided by organizations provides you true and fair view, indirectly I can say whether these financial statements are correct or not, you can judge this thing by reading the auditor's report, right? So here auditor reports, they are saying, in auditor report, auditor are saying that annual report is correct, this financial statement is correct, right? Now further if you see, they provide financial statement also, company provide their financial statement also. So here you will be able to see the balance sheet of this company. So I will be showing you the balance sheet here. So here they have provided you some other information. They have provided, these are auditor informations. So I will be skipping auditor information. And if you see here, you can see the balance sheet, right? So I have already discussed about the balance sheet, right? So very firstly, what company will be doing? Company will be showing their assets, right? Company will start with assets in balance sheet. So first of all, I will tell you that which schedule company will follow to prepare their financial statement. Company has to follow schedule 3. Company has to follow schedule 3 to prepare their financial statement, right? So pakke pakke se company will be following schedule 3, right? In top, company will write down asset here. In top, company will write down asset here, and asset can be categorized into two categories. First one is non-current asset, and second one is current asset, right? So company will be showing their non-current assets in top, and then company will be showing current assets after non-current assets, right? So if you see here, so we have already discussed that what is the meaning of non-current assets, right? So let's suppose if you are buying building for your business, if you are buying some machineries for your business, which will help you to generate revenue, right? Which will help you to generate revenue. If I'm buying laptop for my profession, so definitely laptop will help me to generate revenue, right? If I'm buying cell phone for my profession, definitely it will help in generating revenue, right? So life of my asset will be definitely more than 1 year, and it should help me to generate revenue. Those items will be shown in non-current asset side, right? So investment property, capital work in progress, other intangible assets, these will be shown in current asset side, sorry, non-current asset side. What are current assets? Current assets are generally those assets, or you can say we record working capital requirement in current asset side, in current asset and in current liability side, right? In general, if I say this thing, so here let's suppose if I'm buying stock for my business, I'm buying some raw material for my business, and I'm not able to use that raw material at the end of the year, right? So that inventory or raw material is going to be asset for me, and that will be shown in current asset side, right? Similarly, if I'm selling my goods on credit and I will be receiving the money within a year, so I will be showing those trade receivable in balance sheet, right? So cash will be shown in current asset side. So basically we can say the asset which can be converted into cash within 12 months, those assets will be shown in current asset side, right? And here we will be showing the total of uh, non-current asset and current asset, right? So if you see what is the total of non-current asset, it is 4006 274 274, and here it is 2829. If I do the total of these two values, so here I will get total of assets, right? After that, what we will be doing, we will be showing equity and liability. We are done with asset part. Now we will be showing equity and liability part, right? So here, what is the meaning of equity? So equity means the funds which are introduced by owner of the business, right? So let's suppose I am starting a business and I have introduced some money, right? In my business I have introduced 10 lakh rupees, so that is going to be equity, right? So here I have shown equity in balance sheet. Let's suppose I am issuing my shares to public, right? So whatever money I have received from public, that is going to be shown in equity side, right? So here I will be showing equity, right? Now here also we will be showing other equity. What is the meaning of other equity, right? In other equity, what we do, we transfer our profits, whatever profits we have earned during the year, we will be showing in other equity, right? So we know that whenever company earns profit, let's suppose this year company has earned profit of 1,000 crore, right? And company has decided that company will be declaring 50% dividend. So here company will be paying dividend of rupees 500 crore. Now what adjustment we have to provide for the remaining profit, right? So this dividend which company has paid, that is to be reduced from cash, right? But what about this profit? This profit will be transferred in other equity, and other equity is a synonym of retained earning, right? So we will be transferring this amount in other equity, right? So automatically it will increase my equity value, because shareholders, they are not withdrawing this 500 crore rupees, right? So whatever profit which is not distributed to the shareholders, that is to be shown in other equity side, right? So if you see here, in previous year the other equity value was 4,400, approximately it is 4,397, approximately I will take 4,400, right? Now if you see what is the current value of other equity, it is 5,200 approximately, right? So it shows previous year the value was 4,400 and current year value is 5,200, so there is an increase of 800 crore, right? There is an increase of 800 crore. It shows that company has retained earning in year 2021, that is transferred in other equity, right? So company has distributed some profit and some profit is transferred in other equity, right? That is 800 crore rupees. So here you can see equity plus other equity, the total is going to be shareholders fund. And total equity, we also say it as a shareholders fund, right? So if shareholders fund is increasing every year, you can assume that company is earning good profit, right? Because if profit will increase, and automatically shareholder fund will also increase every year, right? After that, you will be showing non-current liabilities. What is the meaning of non-current liability? Let's suppose you are taking a loan from bank, and you have to repay that loan after 5 years. That is going to be non-current liability. Why that is going to be non-current liability? Because usually, as per definition which is provided in Act, it says that if your liability is repayable after 1 year, let's suppose today you are taking any liability and you have to repay that liability after 1 year from the end of reporting period, right? In that case, it will be treated as a non-current liability. And if liability is payable within a 1 month, within 1 year, that is going to be your current liability, right? So in non-current liability side, we will be recording those liabilities which has to be repaid after 1 year. So you can see here, non-current liability item is given. Then in current liability, we will be recording those items which are to be repaid within a year, right? So here, what we will be doing, we will be doing the total of liability, right? So here, if you see, so what are going to be the components of liability? This, that is total equity, and here if you see total equity and total liability. If you do these, if you add these two components, you will get total equity and liability. And if you see total equity and liability value is same to the total asset, right? These values will be same. Then you can say your balance sheet is correct, right? So hopefully you got the idea. Now we have to understand. See, we read about balance sheet. Now we have to understand that how we have to analyze this balance sheet. How we will find out whether this balance sheet is good balance sheet or bad balance sheet, right? So with the help of ratios, with the help of fundamental analysis, I should show vertical and horizontal analysis, we will perform and we will find out whether this balance sheet is good or not, right? So in coming lecture, I will be discussing about P&L account, and we will see notes to accounts and cash flow statement. And after that, we will learn about uh, vertical, horizontal, and ratios analysis, right? So thanks a lot, guys. Stay tuned with us for better and more learning.